as the institutions now buy these mobile home parks, they increase their requirements, a credit criteria, no evictions, no open bankruptcies, verifiable income. And then we go through our secondary underwriting, for debt to income ratios, make sure, they're not on the lam, stuff like that. Uh, but the default rate has been extremely low over the past 8 years. So we've done it a handful of times where we've had to repossess. The buyer borrower put their head in the sand, and we couldn't communicate with them. Didn't We couldn't do a workout for their first payment. Those situations happen.
Yeah, of
But
course.
it's like a 1.5, 2% default rate at the top, 2%.
Yeah,
You know,
that's
super
phenomenal. Very
super
phenomenal.
great.
Very, very low because when somebody's a lot of times people get into, they're very grateful they do everything they can to
Absolutely.
avoid that because they have no place to go really, out there. And then with these loans, if you did have to foreclose or evict, it's relatively fast because you're in Arizona there, correct?
Great point. So, in comparison of a foreclosure process, here in Arizona, it is a trustee deed state. So, that could take 90 days, and then you got your 60 days of cure. I'm relatively familiar with the SFR foreclosure process. I'm even more, in depth with the manufactured housing. Why? Because it's like a repossession. It's considered a repossessed unit because it's personal property and an eviction process. A lot of the times, if someone's going behind on their home payment, they're going behind with the park as well, if that's, in that realm of environment. And it's like a 40-day process, from non-payment to, 2 weeks later, they get a notice of non-payment. 2 weeks after that, they get a pay or quit. And then 10 days after that, they're having a constable at the house with a writ of restitution, retitle the property, and ultimately, I think it's like a week they have to get their stuff out of the home. They have to schedule it at that point, and then we, repaint the house, do a move in, move out like a landlord and tenant program, and remarket that home for sale and either mitigate loss or earn additional profit, depending on how the deal closed out, how long it took us to repossess the unit, what kind of market we're in right now. Pretty hot for affordable housing. Uh, but with that mitigation of the 40-day period and non-availability for them to keep stewing on losing a house or whatever over 6 months, they could do a lot of damage over that period of time. Where an alternative, they don't really have all that much time to really stew in the house and stuff like that.